Joining us now is Ross Gerber, co-founder, president, and CEO of Gerber Kawasaki Wealth and Investment Management. Ross, good to have you here with us today. I got to know, from your perspective, what is driving the appetite for DoorDash out of the gate here today?
Well, it looks like IPO scarcity is really paying off for DoorDash to get into the public markets, as there's just a huge demand for new securities that sort of represent the new economy, like DoorDash does, and the retail demand is obviously huge.
And so, with DoorDash getting out the door today, setting up for a few more names that we're going to be watching for. We think about Airbnb and some of the names that have even already come into the public markets over the course of 2020. Why is this environment so lush for them, if you will?
Well, it confounds me the amount of desire to invest in the stock market right now. We deal with the public at my firm, and we've never seen such demand from the public to own individual stocks, very much like the 90s when I started my career. So obviously we're very excited about that. And what it really is, I kind of look at DoorDash as kind of like a not so tasty appetizer to the much better, main courses coming this week with Airbnb and Roblox, which, are both exciting companies. And that's what I think people want. We're tired of the discussing Apple and discussing FANGs and what's next for Google. These are well-mature companies with little opportunity, and people are looking for the future, and they're saying, hey, look, there's opportunities in these new companies that are doing great things and reinventing industries like Airbnb, and people want a piece of those, whether they turn out to be profitable or whether these valuations make sense. That hasn't worked itself out yet, but conceptually, people want in on new economy stocks.
Certainly. These are the companies, the disruptors that we've been covering for years, some of them as much as a decade, but the growth has been astounding. You mentioned Airbnb, so let's go there. This is a company that's going to be entering into a public market at a time where its industry, the accommodation space, is facing not necessarily a full-out kind of just dropout. However, for some of their historical players, there is this lower demand that's going to impact them in the near term, but over the long term, they would continue to look back to their platform and say, hey, that's the differentiating factor. And then what are you looking at particularly to deem this a success when it does get out the door?
So Airbnb's business model has proven that the hosts actually take a lot of the risk in the business model. And, when things went bad, the hosts really lost, and Airbnb helped them out a little bit. But the fact of the matter is they've proven that the model is actually super effective as long as it adjusts to the demand level. And they did that by obviously laying off a lot of people. But essentially, if you're a host and you rent your house out and then all of a sudden there's a problem, it's really your problem. And so Airbnb is really a great example of a platform company that really benefits from the commerce on its platform without taking a lot of the risk that actually is on the platform. So I don't think lodging is such a great industry over the next, short-term period of time, and maybe medium-term as far as hotels and Airbnb stays. But, the way they do things, it's incredibly profitable. And I think a lot of younger people just use the platform because that's what they do now.
And then additionally here, we got to talk about Robinhood. Robinhood has reportedly picked Goldman Sachs to lead its IPO as well, a trading platform that's seen a lot of new interest come into the realm on their platform. What does that indicate about the market prospects?
Well, Robinhood's a different type of company. Robinhood is a disaster on wheels. So in their case, they've raised like 17 rounds, continue to lose money, offering free services they can't afford, and have enormous compliance and risk issues because of the way they do business. Letting 25-year-olds with little income trade options is actually illegal. So, the fact that they've allowed so many young people to put themselves at enormous financial risk that's unsuitable is ridiculous. And they have been fined, and they've even had a customer kill themselves, which in 27 years of my career, I've never seen. So, I think Robinhood's trying to go public and capitalize so that their venture capitalist investors can cash out while the going's good. So they're going to rush this thing into the market and hopefully get the cash out. And I think that's what investors have to be really concerned about. These are not new companies that are growing. These are very, very mature tech companies where VCs are liquidating their positions at ridiculous valuations and making a lot of money. So investors beware with these IPOs. just because it's a good name doesn't mean it's a good stock.
Lastly, just in this kind of round robin of the different names that we've been tracking in private markets going public, public debuts, which other ones should investors be watching as we close out 2020 and now eyes perhaps shift after this week towards 2021?
Well, there's a lot of stuff being talked and kicked around, and we'll have to see how the markets, react, because it's very frothy now. So it's a great time to take a company public, but it can change real quickly, and then it's not a good time. But this Roblox company is really interesting. I don't know a lot about it. I'm very involved in the gaming investment world, and this company is doing phenomenally well. It's not the most talked about name because it really appeals to younger kids, and I think this is a great business and profitable, and probably the best of all the companies going public on the near term, even though they don't have as well a known name. So we love things in the gaming space, and this is a great play.
Ross Gerber, co-founder,
Look at
president.
the Unity IPO. Sorry.
Yeah, no worries. Appreciate the insights as always in the conversation. Ross Gerber, co-founder, president, and CEO of Gerber Kawasaki Wealth and Investment Management.